Tesla CEO Elon Musk stirring up controversy with this tweet yesterday and considering taking Tesla private at $420, funding secured. Boom. Now there are reports that the SEC is looking into whether this information is, quote, truthful. Joining me now in a Fox Business exclusive is John Coffey, law professor and director of the Columbia Law School Center for Corporate Governance. Let's break this down. They're investigating it. First of all, was it proper to say this in a tweet? If you are making a move of this nature and you're announcing that you're going private, you're supposed to do it in a press release, but the word considering may get him off the hook. What's your thought?
Well, two questions. First of all, is this the proper way to do it? This is highly irregular, and there's no more important announcement you can make than that they're going to do a merger or a takeover or a tender offer. So it's really market-moving information. But the SEC has accepted in the past that companies can use social media to alert their shareholders if they have previously told the shareholders they might use a Twitter account of the CEO. And actually, Tesla did say that a couple of years ago.
Yeah.
But no one's ever done it about this important an announcement.
So now they're going to
analyze.
Yeah, now they're going to analyze whether or not it was true. So if he's considering it, and he says maybe funding secure, is that the biggest thing they have to prove that the funding was really there? Yeah.
Two words. When you say funding secured, you're telling the world this is a real deal that's been financed by professionals, and that almost certainly hasn't yet happened. The size of this transaction, the total value this places on Tesla, is over $70 billion. If you were to finance that three-quarters with debt, you're talking about $45, $50 billion. That's bigger than any transaction in history, and it's like planning the Normandy invasion and carrying it out. People would have heard. I don't think he could have gone very far down this road, and people don't easily give these kind of commitments. There'd be an awful lot of negotiation. But that does move the market. What you need to understand is that yesterday, the short sellers, no one loves them, but they are investors,
they make
lost over $1.3 billion.
Yeah.
Well, I'm not criticizing them. I'm saying they lost over $1.3 billion, and their view is that he spiked the price with this statement about the funding being secured. And the market did go up, not all the way near his $420 price, but went up enough, giving some reliance to the statement that funding was secured. And that can be a violation of 10b-5, which forbids making any materially false statement that causes others to purchase or sell.
Does it matter if in the end it really goes for $420 a share? Is that number, is that important?
Well, if he is able to get the financing, there would be what the law calls loss causation. There would be no loss caused by this false statement if he later does get that funding and the transaction stays at that price. But there were people who bought yesterday at very high prices. If he has to announce that he doesn't yet have the funding, the stock price will fall, and they also have a cause of action because they believed and relied on a statement that proves not to be true in the full dimensions. So there are different groups out there with different causes of action, and lawyers are going to sue when you have billions of dollars here in potential liability.
Great insight. John Coffey, thank you for that today. We appreciate it.